Seems like we're all here, or a good number of us anyway. So let's go ahead and start. This is going to be a fascinating conversation. I have no doubt. I've been really looking forward to it. For the few of you who don't know me, I'm Deirdre Mendez. I'm the director of the Center for Global Business. And this is the first of our series of Global Shift Dialogues. And we're really excited to be doing these, bringing up-to-date information on what's happening globally. And we hear about big picture patterns, and we hear all kinds of predictions based on different types of data. And what we wanted to do here was bring people who are actually, I probably don't want to use the term in the trenches, but who are actually working in the global economy, shaping the way these things are happening, and also observing the patterns that are going on around them. And our two speakers this evening are very experienced in the global context. Both have global careers. Ray Brimble is the founding director of our center. He's been involved in international work throughout his career. Raj Mahale as well, and both of them, between them, they cover pretty much the whole world. Ray is the the founder and the managing partner at Lynxs Group LLC. And Lynxs Group works on infrastructure and real estate projects related to aviation worldwide. And they have innovated creative finance structures for projects and work with a variety of partnership and investment models. And Ray is also, which is I think very interesting to this group probably, an angel investor in global technology and social impact startups. So that's a very diverse career with diverse parts of the world. And Raj is a partner at KBBH Law, and he is located in KBB's New York office and focuses on corporate mergers and acquisitions. And Raj has very broad experience, especially in Asia. He has experience advising businesses in India, Southeast Asia, China, and the Middle East markets to structure mergers and acquisitions, private equity, and venture capital transactions. So these two people represent very, very diverse industries. And we wanted to identify an area where they have commonalities in terms of their ability to comment on patterns that they're seeing as a result of the pandemic and the global shift that we're seeing over the last 6 or 8 months. So we're asking them to talk about deal flow. So Raj and Ray, both of you have extensive experience with deal flow in your diverse industries. And so what I'd like to ask you to talk about to start off is what were you seeing in terms of deal flow and deal structuring before the pandemic? What were the trends that got interrupted by this new development? And then what happened to those trends? And then what's different now? Okay, so let's start with what there was before and what you've seen since.
Raj, you want to go first?
Sure. Thank you, Ray. Thank you, Dr. Mendez. So let me give you a snapshot. So beginning of January, it was business as usual. We were looking at robust deal flow and the trend lines from 2019 carrying over to the first quarter of 2020 was robust. I thought there was a deal flow increase of at least 20 to 25%. And so we thought it was just going to be another interesting year. We knew we were going to an election year, but we knew at least the first 2 quarters into the third quarter, the deal flow would be really robust. I had gone on a family vacation since we get a winter break. Since I live up in Connecticut, we get winter and then a spring break later in April. We went overseas with my family. We went to Dubai and India, and I got back the 2nd of March. So we were gone for about 10 days, and I went to Manhattan, and this is now the 7th or 8th of March. I get a phone call from a good friend of mine who relocated. He's a McKinsey partner who tracks the deal flows worldwide. And he said, brace yourself, this is real, COVID is real, it's gonna impact everybody. It's impacting Europe, it's gonna come, in a massive way. And he was right. And so my last day in Manhattan was March 11th. And from March to literally the last couple months, deal flow significantly dropped off. We finished the deals that were in the pipeline, or we tried to, but it was a tremendous drop off.
Yeah, so by deal flow, what we mean is deals that we see, deals that we're doing, deals that pop up. And Raj, I had a pretty similar experience in that because of e-commerce and as Dr. Mendez said, I kind of have these two parallel careers right now, because I've had Lynxs Group for 25 years. It does airport infrastructure. And I also launched a angel investment platform called SeedPod about 3 or 4 years ago. So that's picking up. So for this first answer, I'm just going to talk about Lynxs Group and airport infrastructure. And the deal flow has been extremely robust over the past few years, because airport infrastructure is really shifting to e-commerce, to supporting e-commerce. And in fact, I read today that UPS and FedEx are going to have significantly less capacity ability to handle the expected surge this Christmas. So there just isn't enough infrastructure, and we were working on stuff to fix that. For instance, this year in January we opened up a aircraft maintenance facility at Cincinnati, which sounds like a funny place to do airport facilities, but it probably will be the center of the universe in terms of air logistics, because that's where Amazon is building their global hub, and that's where DHL has their North American hub as well. But in about February and March, exactly the same period that Raj mentions, we could see that there was a logistic nightmare starting in China and Asia, because what was happening is, particularly on the surface transport, ocean transport, containers were going over to China and not being unloaded because the workers had been told to stay home, and the logistics supply chain in China had completely broken down. And so the first thing we saw is that there was no, there was not the equipment coming back out of China to support global trade. And I started reporting to my friends. In fact, Dr. Mendez, it seems like you and I might have even discussed this, that there was a global trade breakdown occurring that was going to have ripple effects all over the world. And indeed it did. And so one of the things that we saw was that all kinds of things related to global trade and global transport had all kinds of breakdowns and irregularities. But just to answer the last part of the question, not to be too long-winded about it, something really amazing happened after that. And that is, there was such a demand for PPP supplies and medically related supplies that the global supply chain, particularly the air part of it, completely shifted over to supplying all kinds of things in and out of Asia and all over the world. And in fact, our largest facility is in Anchorage, Alaska. It's a huge cargo airport, but it was probably the 10th most busy airport in the world, cargo-wise, traditionally. About 2 months ago, it became the busiest airport in the world because all these supplies were going back and forth to Asia. And the other thing that happened was that they re-outfitted passenger aircraft that were not in use because nobody was flying to be cargo aircraft. They would just cram boxes of cargo on the seats and everything else. They called them ghost flights.
Yep.
So this is a real example of how those that are fleet-minded and fleet-footed, actually there were quite a few opportunities to take advantage of. And freight rates probably tripled to the most expensive I've ever seen in terms of air transport, and they still remain that way. So that United Airlines, which got approximately 8% of their total revenue from cargo, their cargo division, is now getting almost 40% of their total wide revenue from cargo.
Wow.
We're the only ones that pivoted to cargo and saw the opportunity. And so they're really staying afloat just because of cargo right now. And the other airlines, mostly American and Delta, have not pivoted, and they're suffering greatly.
Very interesting.
So Raj, I'd like to hear from you in terms of, you said everything kind of shut down. So is it all still shut down?
No,
what's the status now, and where are the changes?
Yes, some of the deals that we were working on, we managed to close. And like I mentioned earlier, the first March into April, I think I was working 24/7. There was no off button because they knew where we were at home. So it was like, yeah, can't you get it done yesterday? We're not, yeah, and especially, you know, we in New York were shut down. I mean, literally, it was, there's a town near us called New Rochelle that got impacted pretty greatly, and I had a few friends who lived there. They're telling us just there's police patrolling, National Guard coming. I mean, it was a different world. So for a client's perspective, we were at home. We didn't do anything but work. So we initially got those deals done. Then the sectors that kept steady were the IT sector, particularly SaaS-based companies, healthcare technology, and infrastructure technology. And I want to kind of piggyback on what Ray was saying. One of the early companies that we were starting to work with was an infrastructure technology company that was using analytics and AI as to supply chain management for globalization, such as the global trade sector, and that was kind of interesting. So those sectors became more and more robust, and there's a McKinsey study that came out, I think a month or two ago. They said of all the M&A transactions that are still going on, about 65% of them are in the technology sector. So that's a robust sector, and then those deal flows have just increased. We are seeing other deal flows coming back. And before I get to that, I don't want to go into too great details about SPACs, but these are special purpose acquisition vehicles that they're called blank check companies. They're used to acquire assets to go public. And that they came back in vogue. SPACs were just the rage in the second quarter of this year. There's a lot of SPAC fatigue going on today. As of literally a week or two ago, when we want to do a seminar on SPAC, and everyone's like, no, we're SPAC'd out. So, so we are seeing signs of non-SPAC routes, the traditional M&A routes. There are sectors that are coming back. Particularly in, actually manufacturing, surprisingly. We're seeing some retail, like I said, hospitality, particularly in the distressed hospitality space. I just formed a $200 million distressed hospitality fund that's going after some distressed assets in the U.S. So there are signs of life, and we are tracking numbers that we think, regardless of the impact of the election, that there's going to be deal flow coming back in the first quarter of 2021.
That's so interesting. One of the things that we talk about in class is that when demand shrinks, there's consolidation. And so a natural area you would assume for consolidation would be hospitality, because there's got to be a lot of distressed assets out there. And so there's going to be deal flow around that, is what you're saying.
Yeah, the travel and leisure sector and hospitality sector, there's going to be a lot of consolidation at 100%.
I think this brings up an interesting point, which is that during diversity, we think of good times as being times when we can, when there is opportunity. And I think it's really important to also acknowledge that bad times also create opportunity. And Ray, you're a person who said this, I don't remember in what context to me years ago, but you said there is always opportunity, but it is not evenly distributed.
Yeah.
And so I think for people who are looking at this environment and thinking this is a really tough environment to operate in, we should always keep in mind that every type of environment offers opportunity. And that's one of the things that you as students can be thinking about as you move forward. Where is the opportunity going to be? All right, so that brings me to my next question, which is, I think you've kind of covered this, but I wanted to ask you to talk a little bit about sectors that are showing recovery and lack of recovery. So you've mentioned a couple of areas that are showing, I'm not sure recovery is actually the word, but activity, right? So where are you seeing recovery and a lack of recovery?
Yeah, I'll take that one, and I'm going to put on my seed pod hat now. So this is a angel investment fund that does early stage investments, which is that means it's not a startup, but it's probably within 2 years of being startup. So I see a lot of really disruptive, innovative, mostly technology things, and I will have to say there's huge deal flow right now, and this is kind of getting to your last question, back to your last question, Dr. Mendez, if you don't mind me just touching on that, because I think it has to do with what's doing good and what's doing bad. This is the most disruptive period that I've ever done business in 40 years. And and one of the reasons I think that we're seeing new deal flow and thus, to your point, new opportunities is there's just completely new ways of doing business. One of which we're on right now. And there's this new connectivity that is much easier, much more simple, much cheaper. It's 24/7. And for all of you, it's global. There is, for all the talk of us going into this period where there's less global activity, don't you believe it? I think that what's opening up now, it's like the Red Sea parting, where there's a new definition or sense of what I'll call proximity, the new proximity or neo-proximity, which means that we're all right next to and have instant connectability to each other. So one of the things you're going to see that you naturally do as students is different kinds of team building, which will be globalized team building as well. And this is going to have great innovation capacities. Another thing that's really driving the deal flow that I see is phenomenal liquidity in the world, both here in the United States and also global money. And that global money is actually coming into the United States in increasing quantities because this is the best place. A lot of people consider this to be one of the safest places to invest. So you have a lot of deals chasing, or you have a lot of money chasing deals. And one of the places that you've all read about, or maybe you've heard about is just in real estate, local real estate, both commercial and residential. I am told that if you have a house for sale in Austin, Texas, you will get offers on it virtually the same hour you put it out there. There'll often be multiple offers, and you often will get more than you asked for. So that's driven by liquidity and also lack of supply. So a lot of companies think that this isn't a good time to go out for further future investment, but this actually is a good time. And then the last thing I'll mention is interestingly enough, I feel that people have more bandwidth because we're sitting around looking at Zoom all day long, and in our pajamas and so forth, and we're looking for things to do, to invest in, and the community is kind of a global community as well. So all of this breeds a more receptivity to innovation. And there's going to be a lot of early stage companies that are going to get a new look because people have the time and the money and the proclivity to look at them. So in terms of, I know y'all don't want jobs or anything, but I'll just mention it anyway. In terms of where you look for jobs, I know that the career office will mostly offer larger corporations for job placement, but the medium-sized corporations and even some of the early stage corporations that are well-funded are really looking for people. And I'll give you one example. A friend of mine just got a job with this company called Disco, which sounded like it was a nightclub, but what it was is Raj, you might be interested in this. It's a legal services company that uses AI to do legal discovery, and they raised $150 million. They're hiring 300 people right here in Austin, and nobody knew about them. And there's dozens of these kinds of companies around. So as the world gets more innovative, just be sure to be innovative in kind of the rocks you look under as well.
So,
thank you.
Oh, sorry.
I was just going to ask you to to add your 2 cents on what you're seeing in your industry as well.
It's literally 2 cents. I just wanted to piggyback on what Ray said on the topic of liquidity in the market. We do see working with a lot of companies overseas, as you mentioned, in Asia, the Middle East, and some Europe and China. The U.S. because of the rule of law, because of the system of jurisprudence and how our markets are, and with diversification, we are the safe haven to invest, especially in certain assets, particularly real estate. And so we are seeing an uptick of activity, particularly family offices. These are high net worth individuals or families who are either co-sponsoring or piggybacking off of each other to invest, and that has been an uptick. We are seeing those opportunities because certain aspects like real estate is distressed in certain sectors than others. So there are opportunities for that. But I want to also touch upon what Ray said about companies and innovation and what's going on next. And he's spot on. I have 2 companies. I'll mention to them in confidence. You can look them up, but Dusk Rig and Moonbeam. They are beyond early seed. They have angels in place, but 2 different aspects. Dusk Rig has several patents pending. They are creating the next virtual office system space. It's sort of like, if you think of WeWorks in a way, but now virtual from literally your home office. They have multiple screens going on where you can do, it's just, I can't even describe it. They may have a demo on their website. It's pretty fascinating on what they're trying to, because they think this is going to be the new normal and people are going to be more efficient by just working from their home office. And the other one, it's to raise a Disco reference to the company. Moonbeam is they helped develop. They were early pioneers. It was a different name. The virtual AI goggles that they wear, virtual reality goggles. Well, they're developing that in the legal space. So I guess I'm the crash test dummy for that, which. Sure, sign me up. But it's you wear the goggles and you're literally in a virtual room, a conference room, where you're using you're in a room with other people who are wearing goggles from their home offices, and you're literally in a virtual meeting space. Yeah. And the documents are coming up, and you can literally edit documents and discuss deal flow, and it's just like you're there. And so they're working out the kinks, but they too have patents pending and more money flowing in. They're based in Seattle, so that's that could be the future. And you're right, Ray. I mean, that's the trend lines that we're seeing. Innovation's here.
Gosh, Raj, I didn't realize that being an attorney was so glamorous. That's really cool.
Crash test dummy, sign me up.
All right, super. Well, thank you. And then another question I had is, okay, so deals are being done and contemplated and moves are being made. And some of the players you've mentioned are different from before. or are more prominent than before, some sectors and so on. So are the deals standard deals that were being done before, or are there new structures? Are there new models of partnership and so on? Raj, I want you to go first on this one because we talked about it earlier, and you said you're seeing some new stuff.
Sure. So I'll wear my legal hat now. And there's some questions in the chat room that I'm going to try to address as well with this. We are seeing certain clauses that are more important, like reps and warranties clauses are being negotiated heavily, particularly the material adverse effect or material adverse clauses that have been invoked. These MAC clauses are being more and more invoked to get out of deals or restructure deals. What is materiality? That's a whole different concept being negotiated. Indemnity buckets are being negotiated heavily. And the other thing that's really, really interesting for us is force majeure, which used to be, act of God, so on and so forth. It's interesting that those force majeure clauses have been tested, as you can imagine, and those versions have changed it. And so there's being carve-outs for future deals where force majeure does not include pandemics anymore. So just because the next pandemic, you can't insert a force majeure clause. So yes, the way we are reviewing agreements and the way we are structuring deals, it is the new normal, and in certain things that were not as negotiated before are negotiated, heavily, and just a deal. And then the other thing I'll add is, again, a legal term, earnouts. We know earnouts were used a lot before, but they have special emphasis. And what an earnout basically is when you structure something, you can structure a deal where you're paying a little up front, and then based on certain, triggers or transactions or thresholds, the payments are made at a later date. Either for more equity or for more part of the company, but those are being utilized more and more as well because everyone's trying to mitigate the risk. Buyers are mitigating the risk by having less cash outlay up front versus sellers, want the cash, but now they understand that they want the deal done, so they're more willing to figure out a more effective earnout.
Super, thank you.
Sure.
Okay. And Ray, what are you seeing in terms of deal structuring, et cetera?
Well, I'd like to answer a little bit different way because Raj is a lawyer, and to tell you the truth, I see so many different structures now. I'm constantly having to relearn how these deals are put together. But one of the things that relates to different kinds of deal structures I'm seeing is something that Raj touched on, and those are the players, the investors, where the money comes from and so forth. There's a much broader range of players out there. It used to be that it was really just, the large corporations, particularly international, that did deals internationally, and the large banks and so forth. And now we're seeing all kinds of people, from individuals, high net worth individuals, to, as Raj mentioned, family offices. Honestly, I'd never heard of a family office 5 years ago. I'm sure they existed, but I never saw them in my deal flow. And now I would say virtually every deal has the family offices, which are kind of like legacies of people that made a lot of money, and they may be intergenerational now, and they're out there looking for deals globally. There's all kinds of platforms being put together. I hope we can get to the subject of impact and social impact investing at some point, but in relation to that kind of deal and investing, virtually all of the big investment houses, from Goldman Sachs to Blackstone to JP Morgan, Morgan Stanley, they all have these investment platforms now where they go out and solicit money from their customers, and it all goes into this big fund, and that fund goes around and finds deals. And some of those deal finders find me on my deals. And I never saw that before. They never reached down to little pipsqueaks like me in my deals before, but now they do. So not only do you have the whole world is, mixing and matching in deal making, but you also have all kinds of levels of capital And one of the problems with that is for you to do due diligence on this wide variety of characters floating around. It used to be pretty easy, you know, when General Electric called, you didn't have to do a whole lot of due diligence on who they were. But when some family office out of Taiwan calls, it's more difficult, but oftentimes they will be the better partners to work with. So it's both more interesting and more complex right now. And it really is going to take a higher level of sophistication on your generation's part to be able to do business in this diverse and global environment.
Okay, and Raj, would you speak to two things? So Ray mentioned impact investing, and one of the interesting things that he mentioned is big companies are doing it. So can you speak to that? And then there was something else about structuring that he mentioned that I wanted to ask you about. But anyway, can you talk about that a little bit?
So impact investing, what I found was it used to be a taboo word just a few years ago. A lot of private equity firms, people who or philanthropic firms who wanted to impact, you know, society, and they were, you know, labeled as almost like a nonprofit. You know, they had, it's a very esoteric ECG impact. So they weren't really making money, and that's not necessarily true. There are for-profit, they do want to have impact, and the limited partners that do put in their money into that structure are getting certain returns, but their thesis is different, and what they're trying to do is, and I'll give you an example. When you think of impact in a certain way, think about Bombas, right? The sock company, you know, their whole thesis is for every pair of socks that you buy, we're donating a pair of socks. So in a way, it's a for-profit company, right? They're out to make money, but they have a social impact to their corporate ethos. And some of the investors that are putting money in are motivated by that. And some of the early investors were impact investors that put money in because of that. So it is not a taboo word, and more and more we're seeing you know, larger and larger impact investment houses that are coming into vogue for social purposes. And I think that's the trend line. I think there's going to be more impact.
And this is an area that our students are very interested in. And so I think it offers a lot of interesting opportunities. And as you say, it was taboo a few years ago. People rolled their eyes and
right.
You know, they said, oh yeah, well, that's frou-frou stuff and it's not serious. And with a business roundtable announcement a couple of years, well, it's been about a year, I guess, that really the bottom line is not the bottom line anymore. And these things should be revisited, and then of course the effects that we're seeing of the pandemic, I think right. I think all of that is helping to bring that to the fore. Well, you've answered most of my questions, and I have two remaining. One is, and I want to get to the questions from the audience because there are a lot of them. Yep. One is, what are you seeing from the future? For the future, do you have any predictions about the way things are going and where we're going to see change that you haven't already mentioned? And then the other thing is, for people who are getting into your industry or moving into the workplace, what kinds of skills are you seeing? We're trying to, you know, at McCombs and in our international business program and the Center for Global Business, we're working very hard to help students understand the skills and the requirements that employers are looking for, and you know, what should we be providing, and what should students be looking for?
Yeah, well, I picked a couple of different areas that may be of interest to you students, because I think they'll provide immediate opportunities. When I say immediate, let's say the next 5 years. And both of these are actually long-term trends, but they really haven't been acted on to the extent that they could have been. And this is where all the money's going. The first one is actually the majority of impact investment, social impact investment, actually is going to clean energy and all kinds of environmental, agricultural investments. And this trend is actually is exploding, and one can expect with the reaction that we're going to have to climate change, that this trend will actually, there will even be more money pumped into it. But I'm seeing a lot of good returns on investment now in this area. In fact, I just want to mention that there's an asset management company called Pictet, which is a $209 billion asset management company. And their ESG portfolio is returning on average 5% more than all their other portfolios combined. So this whole notion that it's just woo-woo stuff, that nobody's buying that anymore. This stuff actually makes more money. How that translates to you is, I think there's going to be a tremendous amount of employment opportunity in all kinds of industries and companies that are doing things related to the environment and clean energy production. So that's one. The other one that's going to have almost an immediate effect is infrastructure development, because this is something that in the United States, there's been bipartisan agreement that we need to improve our infrastructure and invest hundreds of billions, if not trillions of dollars. It just has not been done. I am totally convinced, no matter who wins the presidency in 2 weeks, we're going to have this investment. We have to have this investment. There's going to be a huge amount of employment opportunity for manufacturing, for building, for design, construction. Again, there's a lot of environmental aspects of that as well. So, you know, that's, and then finally, both of those things are inherently global. It doesn't make any sense to look at solutions providers as just being national in many of these instances, particularly in the ESG area. So, you know, there's going to be opportunities mostly for you all. It will probably look more like foreign companies that want to participate in North American growth that need to build up their staff here in the United States. So, you know, don't just look at American-based companies, just be global in how you see your job search. And that's why you have to have some global kind of mentality or disposition, because they'll be able to tell, you know, if you're insular in the way you look at the world and business, it's not going to work for them. So really cultivate that.
Thank you. Super. Raj, what do you have to say?
Yeah, that's hard to follow. Ray was just, I mean, that's just spot on, Ray. I mean, I can't, I mean, that's just beautiful. You nailed it. I mean, let me just kind of, couple thoughts, and I'll address some specific skill sets that some of the employers are looking at or telling me they're looking at graduates coming out of college. One term that I'm hearing from companies, the effectively best run companies, the smaller companies, is called cultivating compassionate leadership. My wife is part of a company that's potentially going to go public in a couple of years. They're based in Manhattan. They're the top 5 companies to work for. What I've found just tangentially watching, you know, what they do, they have the CEO literally and a management team, effective lines of communication. They have town halls every Monday. They believe in a work-life balance. They use special, they call Slacks. They have different Slacks for different things. And it's about communication. But what's communicated is compassion, you know, vulnerability, respect, and empathy, especially during COVID, and even after that. And it's just a really well-managed and well-run company. And they're looking for talent that has those abilities. You know, when they see, oh, you know, we're looking for a team player, that's so cliche. I mean, yeah, we want a team, but what does it really mean? And they mean really from the soul. You're there for each other. You're there to pick up the pieces when someone, you know, goes down, the next man up mentality or next woman up mentality. That's how it's supposed to be, and their companies run like that. Specifically, we are in the digital age, connectivity age, and what some of the skill sets that they're looking at, or, you know, how cognitively are you thinking through the different aspects of things that are thrown at you? We all know these students are much more digitally connected than I was 30 years ago. So, and then innovation, managing strategy, other thing, managing tools and technology, interpersonal skills, adaptability. How does one, how do they manage change? So these are the things that they're looking for in corporate America today.
I think those are fascinating points because they really lean pretty heavily on soft skills. And one of the things that our research is showing at the Center for Global Business is that hard skills are a near-term strategy. You know how to do X, you can get a job. But soft skills are a career strategy. And that's one of the things that we really focus on in international business is developing those kinds of people skills and sort of global understanding and so on. So I think those are really fascinating points and, really valuable. All of you may feel that you're walking into an abyss as you graduate and the world is unknown, but keep these things in mind. And then let's go to some of the questions because there are so many. We will not get to all of them. So I'm going to skip around a little bit, but there's one here for Ray. Speaking about American Airlines, do you think the addition of many of the new long-haul routes they just announced to India and South Africa, for example, are driven by possible cargo opportunities, or do you think United is seeing this as an opportunity to expand in markets in which they have traditionally been weak or where competitors are going bankrupt or cutting routes?
Wow, what a great question. Yes on all of that. Cargo is definitely driving the connectivity, but also it speaks to new forms of relationships and connectivity, both business and social, that we have here. I mean, specifically in Texas, so much of our population is are immigrants or second generation immigrants from all over the world, certainly from Nigeria, the Middle East, India, Pakistan. And this is who we have relationships. It's not just about going over to London anymore. That's kind of old school. And then a generation after that going over to Japan or something like that. We're going to be building relationships in all kinds of diverse places around the world. And I think American Airlines recognizes it. They're a little bit ahead of the game on that, and I really salute them.
Thank you. All right, Raj, here's a question for you. Because of the pandemic, businesses have transferred to online operation. How long did this pivot process take, and how has that impacted the work environment? So since you've been talking a lot about the work environment and those goggles that enable you to see into the future, I thought you could answer this one.
Well, as we were speaking yesterday with Ray and you, Professor Mendez, about deal flow cycles in general, representing PE firms, it used to be when they were evaluating deals, they would want to fly to evaluate companies, and there'd be a process and it'd take time. That life cycle of the deal flow process has shortened. Because of connectivity, because of this, people are able to evaluate things much faster. They do not have to travel. There's more, more efficiencies built in, and it also the targets that people are investing in have to sharpen their skills and be able to answer questions on the fly and just be on top of things even more and be more prepared. And therefore, as the deal flows are shortened, there are more active deal flows, and I think that's gonna stay post-pandemic. I think there's a better way of doing things, and you're saving money. Everyone's saving money if you think about it. If you don't have to travel, you're saving money.
Super, thank you. So Ray, we had a question about the busiest airport being in Alaska. Why Alaska? It's so remote. Why would it be Alaska? Can you answer that?
Love answering this question. I could give you the 5-hour answer or the 30-second answer. I assume you want the latter.
Maybe the latter.
Yeah. So in the late early 1930s, Charles Lindbergh, after he flew across the Atlantic, was hired by Northwest Airlines to figure out the best route over to Asia. And it turns out that you go up over the pole and back down. That's the quickest and actually the shortest as well. And that route flies directly over Anchorage, Alaska. So that's the quickest route. But the reason that it's good for cargo is probably 30 years, maybe 35 years ago, aircraft could fly nonstop from Asia to the United States and back. And passengers no longer wanted to stop for 2 hours in Anchorage while they refueled. Actually, back in the early 70s, Anchorage, Alaska had the second busiest duty-free store in the terminal in the world. The first busiest one was a similar situation in Shannon, Ireland. But passengers didn't want to stop anymore. But cargo doesn't mind stopping for 2 hours. And the economics are that when you take off from Seoul, Korea, you can either add more fuel so you can make it all the way to Chicago, or go on like 3/4 of a tank and add more revenue paying cargo on.
Cargo. Yep.
And those economics still exist to this day. So even though most of the aircraft that go through Anchorage and stop and get gas and do things could make it to Chicago and New York, they don't, because the economic model says put more cargo on there and less fuel, and therefore they stop and refuel.
Boy, you are really the person to ask that question of.
I love that question.
Okay, super. So Raj, these are just wonderful questions and wonderful answers. Thank you. So Raj, there have been several questions about this. So we hear good things about Zoom and we hear bad things about Zoom. We hear about Zoom fatigue and people who are, miserable. So is virtual really the future of business, or is the lower quality of communication by virtual not worth the benefits of increased connection?
No, so you're talking to the wrong person. I am still old school. I hate to say that. I do believe in the aspect of meeting folks face to face to a degree. So let's take it post-COVID. We have the vaccine in place. Everything's sort of back to normal. I think there's going to be a blend. There's absolutely the new technologies that are coming in vogue, like I mentioned, desk rig, moonbeam, sure. But I think there's still a preference to meet people and be around the table to have active discussions. But I think there's going to be more efficiencies built into that, and that's all I'm trying to get at. It's going to be a combination there. But I don't think the days of not meeting. But that being said, if you can save costs of going to China or India or wherever, or Australia, and not have to go on that flight, absolutely. If you can get the same transaction done or the negotiations done via Zoom or a better form of Zoom. So we're seeing Zoom now. I'm starting to see some interesting things, things beyond Zoom. It's going to just be wild.
Cool. Thank you. Ray, do you think that all of these investments in delivery infrastructure will go to waste because of drones that companies like Amazon are going to utilize to cut costs?
No, I don't. In fact, we probably have 50% of everything we need infrastructure wise. And so the drones are really for very small last mile deliveries. It's not a particularly efficient type of aircraft or delivery system for big stuff, and we'll always need very large aircraft to carry things between hubs, between Asia and the United States, or even between Chicago and Miami, and so forth. But the other thing is the big trend in global logistics right now is what we call perishables, which is anything that needs to be temperature controlled and certified and so forth, and medicines. And the COVID vaccine is a great example of that. And you would not want your COVID vaccine coming to you by drone, because just who knows? They have to have real human beings and and real instrumentation and a very complex system of certification that the drones would be outside of that. So there's always going to be those kinds of things needed for the distribution and logistics infrastructure we're building today.
Okay, thank you. So we have a couple of questions about the trade war with China. Do either of you have specific, from your perspective, is the trade war going to continue? Are things going to get better? Is the U.S. going to back off from its stance? Do you have comments on that?
Well, I mean, I'll take a crack at this. I think we got to define what a trade war really is. Are we really in a trade war or not? Because I think some of it's just optics and politics. So we got to be very careful because, China is still an active trading partner. They're there to stay, and it's going to be one of our largest active trading partners here on out. So, I don't have a specific answer to that, but I don't necessarily believe that we're in an actual trade war. I hate to say that. I don't believe that. And I think depending upon, where we go, I think the countries, regardless of who wins the election, are going to find more solutions to working toward each other together than drifting apart.
Yeah. I just mentioned a couple of other things, Raj. I personally think that there were a lot of inequities between China and the United States, and China and the whole world.
Yep.
Needed to be addressed, particularly around technology and
IP. Yep.
and IP and so forth. And it was just we had to do it. Has the current solution done any good? No, it's been an absolute disaster in my opinion. And there is no question in my mind who's losing the trade war. I mean, you can't really call it a war. It's more like the United States has been taken out to the woodshed and beaten half to death. So, I mean, if to Raj's point, there needs to be, both sides need to come to the table again. It's not benefiting either one of them. And I agree with Raj. I think that's just what will happen over the next couple of years, let's say, because it has to happen. What we're in right now is extremely expensive,
correct,
mostly, and unintelligent, and it's not solving anything whatsoever. And so I believe that the Chinese and we are ultimately reasonable trading partners, and we'll find better solutions than we have now.
100%.
Thank you. All right, and here's a question for Ray. You mentioned that you have to constantly relearn all these new deal structures. Do you think that this evolution of how deals are being crafted will call for a higher need for consulting firms to come in and help speed up the learning curve? What is your position on consulting services versus in-house expertise?
Well, I tell you, the structure of consulting is extremely valuable for people like me because I have a small company. I don't want to staff up. My deals are lumpy in that on one deal I'll need like an IP guy, and on another deal I'll need a trade guy or something like that, or gal. And having consultants available allows me to pick and choose what I need for each deal. That's the first thing. However, I'm going to go a completely different direction. Raj, you're going to hate me for this, but what I'm seeing is IT and artificial intelligence solutions that are allowing me to do a lot of things that I used to have to pay consultants a lot of money to do, and it at least allows me to do some preliminary evaluations of certain things. And there's so much information available and so much consolidation of information and packaging available now that gives me a level as a small business guy underneath consulting to kind of get my head around what I'm looking at. But I'm extremely grateful to have consultants. I also think it's an excellent place for you all to start your careers because you get to see a lot of deals, you get a lot of mentorships, and it pays well. So what's there not to like?
All right, thank you, super. Either one of you can take this one, but we're hearing a lot about automation taking jobs and that this is speeding up because of the need for remote work and so on. Do you have comments on where that's heading? Raj, you're the virtual reality person.
Well,
What would you say about that?
I mean, I think, like Ray said, there's valuable human input still. So it's having the right skill sets, and what the skill sets are, that some of the more mundane aspects of automation are going to happen. There is going to be an AI element to that, absolutely. But I think at the end of the day, there's going to always be a human component that needs to be there. And that's going to, I mean, I don't think that's going to be replaceable. Now, we're comparing, apples to oranges here. Look, I'll go on a little bit of a tangent, and I don't mean to do this, but it's like this. So everyone's on Amazon now. Everyone buys. So the big box retail, right? Your experience of big. I don't know about you guys, but I don't enjoy going to big box retail anymore because I find that most of the folks that maybe the training's not as there as it used to be. When I used to go to Home Depot, let's say, I'd ask for certain things. You'd have a very knowledgeable employee base, and they came from the industry, they're former contractors or what have you. That's not the case as much anymore. The other day I went to Dick's Sporting Goods for a particular sock, and the kind young lady told me they don't sell socks at Dick's Sporting Goods. Really? I almost lost my mind. You're in a sporting goods store, no sports socks, huh? I walked out of the store scratching my head. So because everyone's going online. So yeah, certain aspects of automation are there's job loss, but I think depending upon the skill set and the skill and sharpening those skill sets, there are certain skill sets that I don't think will be replaced now. Will they all be replaceable? Look, I mean, like Ray mentioned, I'm seeing some interesting software in the legal space that it's pretty interesting. I mean, it can virtually do a lot of the contracts, and maybe you just need an attorney that's not being paid at billed at XYZ an hour to review it. And that's, on a personal note, one of the reasons I changed my practice from being at a big law firm where I was billed out as a partner at an X rate that didn't see the value in it personally. And I enjoy working with smaller companies anyway, so.
Well, thank you very much. We are at the end of our time, and I want to be respectful of our speakers' time, but so many fascinating points have been brought up here that I'd like to ask each of you if you have anything that you didn't say that you would like to add for our students or from your own perspective about what you're seeing. Would you let us know now?
I'll just say that I was an international studies major, which is slightly different from IB.
Almost as good.
It is. I can't tell you how valuable and interesting it's been for my career to have a global career and to have that background and just that sensibility that you're a global citizen, and it really has given me a great advantage over the past 40 years that I think is going to even accelerate in the next in your career. So I really encourage you to keep studying things international, and I think it'll be a great arrow in your quiver. So congratulations.
Yeah, Ray, you spot on. I mean, just reading these questions, you guys, I mean, I don't know. I was an IB student, and we had a pretty darn good IB program when I went to UT. But just seeing what you guys are going through and the level of sophistication and with the co-ops and internships, globalization is here to stay, and it's going to rapidly change and still changing the spectrum. There's an evening of the playing field, and you're getting some sharp people from all over the world. And when I deal with students from all over the world, so it's just getting better. And you guys are the future. You are the best and the brightest. Just remember that.
You bet.
Well, that's a wonderful upbeat note for to end. I want to thank both our speakers very, very much. And I want to thank our students for wonderful questions. And again, thank you to our speakers for sharing their insights and for their wonderful answers.